Hello, welcome from Trend Signal, where we're going to review the data and events the week beginning the 15th of August. So we're already into the halfway through August, normally a fairly quiet time for the markets. I say quiet time, certainly liquidity and volumes are low, but it does make the markets more susceptible to some rather exaggerated moves should unexpected events occur. None so far this August. We're halfway through, but markets continue to grind higher. Some extraordinary moves in sovereign bonds as yields go lower and lower still. The yield on the UK sovereign bonds, the gilts, they started the year close to 2%, the 10-year yield. Now they're just 0.52%. So you can see perhaps why investors are piling into equities rather than tying their money up for 10 years to get a paltry 0.5%. But that's the way of it at the moment. Let's have a look at the calendar to review what's going on. We start the week with actually a holiday on Monday in both Italy and France, a Catholic holiday called Assumption Day or Feast of the Assumption. It's an important day in Catholic religion. Will have very little impact on the markets. They are generally quiet anyway, as I've just been saying, being August, so won't really be noticeable. Let's just have a look at some of the moves and data we're expecting. The highlight of this week is probably Wednesday when we get the minutes from the previous Federal Open Market Committee meeting, the rate setting committee of the Federal Reserve in the United States. Markets have gone a little bit complacent regarding rate moves. Last week's data, certainly on Friday, was pretty disappointing, where retail sales, PPI and consumer sentiment all missed consensus. I think there might be a bit of a reality check this Wednesday at 7 o'clock, where the Fed will explain their thinking. Markets are still focusing on December for the first rate hike this year. Noticeably, the previous first rate hike for a long time was last December, but the Fed has rode back on expectations this year. There's been a number of bumps in the road, and the data, whilst employment sort of started to slip a little bit, or increase, I should say, or the number of new jobs slowed, that's picked up a lot in the last couple of months. So the data is key, obviously, as always, but what the Fed are thinking is always very illuminating, and that's 7 o'clock on Wednesday. Other than that, this week we have inflation data, CPI data out in the UK, which is out on Tuesday at 9:30. In the afternoon on Tuesday, we also have the US inflation data. I say inflation data. For some economies, it's actually deflation, of course. So the point being that inflation is not really an issue. Could be more in the UK, where the cost of goods and services being imported, priced in other currencies, are obviously gone up in price as sterling weakens further on the exchanges. Now sitting below 130 against the dollar and remaining so. So that opens up the lows from the couple of weeks after Brexit vote, so down around 128, just below 128 level. So that's CPI there. On Tuesday, we also have an important number from Germany, the ZEW Economic Sentiment Indicator. That is expected to rebound from the pretty unpleasant or dire reading last month. But generally, Germany is steady as she goes. But output still not matching the likes of the UK, US, or even the UK, actually. So that's the Eurozone for you. We then have more manufacturing data this week. In fact, the key date for data this week is probably Thursday, with the Philly Fed Manufacturing Index. It's one of the main federal districts. They break it down into districts, and the Philadelphia area has got a lot of manufacturing, so economists tend to focus on that one. So the Philly Fed Manufacturing Index also rebounding a little bit from the previous month. The data is important because, as always, as I said, the Fed will continue to focus on how the market continues to perform, and the manufacturing sector, whilst it's nothing like as big as the service side of things, it does have a bearing on the Fed's policy. So we'll see how that goes. We also have the regular crude oil inventories out on Wednesday. Crude had a great week last week. In fact, on Friday last week, comments from the Saudi oil minister, Khalid al-Falih, said that the kingdom was ready to work with its non-OPEC partners to help market rebalance. They've got a history of saying stuff like that, but when it comes to the final discussion, not quite been able to agree on it, mainly because of problems with Iran and bitter rivals, really, who are pumping oil and inevitably looking to take any market share where they can, mostly off the Saudis, obviously. But for the time being, the market reacted very positively. Oil up more than 5% in 24 hours, actually, Thursday night, Friday morning. So that really has put paid to the idea that oil is technically in a bear market, which it is technically, having fallen more than 20% from its peak from mid-June. Other data this week, not a lot really to shout about. Retail sales in the UK, I've got a feeling that that number may be a little bit more than plus 0.1%. I know the British Retail Consortium reported a fairly positive picture for July, so certainly rebounding from the minus 0.9% the previous month. So that data may have an impact on the sterling markets on Friday morning. Other than that, as I say, it is August. It is fairly quiet, but again, unexpected events, and we don't know what those might be. They can have a pretty significant impact on the market should they occur. The VIX, the volatility index, the fear and greed measure in the US, still very close to all-time, well, very recent lows, going back to sort of 09 time. So it suggests that should there be a shock, it would be quite painful. It always seems to happen in August as well, doesn't it? Okay, that's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.